Very warm goodbye evening for Laura Biffles, the outgoing UK Deputy High Commissioner to Nigeria. Also, let's talk with the markets. Of course, if you're in the news, you already know that UK's Prime Minister Theresa May's latest Brexit deal was dead on arrival yesterday. So it looks like everything is on parking. But the key question is, who's getting burned by the burning Brexit train? That's the big story for UK equities, for currencies, for businesses, and for everyone. So as always, we're going to check it in with our London studios, where our team is always keeping eyes on Brexit, economy, currencies, the marketplace, the entire market street in London. Let's bring Simon Pusey, who is London correspondent, one of our London correspondents, and is live to us this morning to take us through this very burning Brexit issue and the tough times that the Prime Minister is currently facing. Bring us up to speed, Simon. Good morning. Welcome to the program. Very burning. Tough times.
Morning, Vosen. Yes, thank you. Brexit. We're somehow still not bored of it here. The news that pretty much everyone hates the Prime Minister Theresa May's latest proposed deal doesn't seem to have affected the markets that much this morning. The FTSE 100 opened 220 points higher today, having closed up 0.25% yesterday. For the pound, it's a different story. It continues to fall, and while it picked up later in the day yesterday, with supposed cabinet backing for Theresa May's latest Brexit plan leading to the rebound. But this morning, a lot of people are coming out and criticising it. For example, a few hours ago, Michael Gove hinted that Theresa May will actually pull the latest Commons vote on her Brexit deal to avoid a massive defeat, a move that's likely to trigger her resignation from number 10 Downing Street within days. So expect to see the pound sliding further today if and when more criticism of what this deal, a lot of people think, cannot go through if that continues.
But Simon, who's getting burned by this Brexit, burning Brexit, on the political side on one hand, and the business and markets on the other?
Well, on the political side, no one is winning here. The Labour, Conservatives, all the parties are losing, really. The only party, really, that's doing well is Nigel Farage's new party that he's just formed, called the Brexit Party, that are supposed to do very well at the European elections in a couple of weeks' time. But certainly the Conservatives are really tearing themselves apart over this. They're supposedly going to come fifth in those European elections. And of course, the pound is really the thing that's sliding. It's been at an all-time low for the last 3 years, and a lot of people are saying that that's revolving around Brexit.
So let's take a look at a very important part of the British economy, which is the British steel. 5,000 workers are hanging in there and looking at what the current Brexit deal will mean for their future as workers of this very big industrial concern that is part of the underbelly of the entire industrialization of the British economy. What's the latest here? What is at stake here for British Steel and these thousands of workers, Simon?
Yeah, this is a really fast-moving story, actually, Bosun. In the last few minutes, it's been announced that British Steel is to enter insolvency, putting 5,000 jobs at risk and endangering a further 20,000 in the supply chain. The UK's second biggest steelmaker had been trying to secure £75 million in financial support to help it address Brexit-related issues. This was later reduced to a request for £30 million. The accountancy firm Ernst & Young have been in court today announcing the fact that it is going to go into administration and EY will be trying to find a buyer for it. In April, British Steel borrowed £100 million from the government to enable it to pay an EU carbon bill so it could avoid a steep fine. According to a certain think tank, allowing British Steel to collapse would lead to a £2.8 billion loss in wages over a 10-year period and cost the government £1.1 billion in lost revenue and extra benefit payments. Such a decision would also reduce household spending by 1.2 billion, which would have an impact, a massive impact on the economy. So we'll be keeping an eye on this, and we will check back with you this afternoon, because this is a really fast-moving story. British Steel has had a long history in the UK. Lots of people rely on that industry. But at the moment, it's gone into administration, and Ernst & Young will be looking for a buyer. The problem is, no one wants to buy a company that's struggling in a really competitive market. So we'll check back with you this afternoon and keep you updated on that.
Yes, precisely, Simon, a very important part. But again, with Brexit, with debts and a few other things, who want to buy British Steel at this time? No one is sure how the Brexit will end. So it's going to be a bit difficult here in everybody's minds with those 5,000 workers, British workers, who need to have some certainty about where the company and their pay packet goes from here. Thank you very much for checking with us later in the afternoon. Simon Pilser, part of our team in London, one of the world's economic capital. Thank you so much for being part of the program this morning. Let's come back home after the break. Of course, it was a big day for Nigeria when we talk about the Monetary Policy Committee meeting. Yes, yesterday was do nothing, but it was more about wait and see. The MPC says, let's wait. We give the market and the economy 50 basis point haircut on March the 26th. Let's fold our hands and be patient and see how things go, not with inflation that trended higher in April and a bit of a softer GDP in the first quarter. So what does it all mean when the MPC tells the central bank to cut the appetite of commercial banks making cheap money, and a pile of that money, billions of naira, by treasury bills and government bonds? All of that when we come back.